being taken place after this. And with that note, our next session will be the corporate tax and fiscal policy after the COVID-19 pandemic, in which there will be 3 individuals, will be moderated by one, which is Chiu Ho Ling, and the panelists will be Abu Tariq bin Jamaluddin, who is the Deputy CEO, Compliance, Inland Revenue Board of Malaysia. And the other panelists will also be Muhammad Faris bin Muhammad Farouk, who is the Executive Director, Business Tax Audit and Investigation of Deloitte Tax Services. So without further ado, ladies and gentlemen, can we please get a huge round of applause for these 3 respective individuals in the topic of corporate tax and fiscal policies after the COVID-19 pandemic. Thank you.
Looks like a total silence, huh? Either they are very interested in these 2 gentlemen, or after lunch everyone falling asleep. Okay, since this session is after lunch, the panelists, to make it a little bit more educational, because I have lunch just now and mingle around. Most people are like me, pretending to know taxes. And of course, most of the time, the Chinese, I'm not sure about all Chinese, but my family brought up to evade tax. And, and now they say, no, this is not evading tax, this is tax savings. So in a more legal way, right? And today I'm sitting on stage with 2 masters and giants in compliance, tax compliance. So I better be careful with tax savings now. Okay. And since most of us are people like me who do not know much about taxes, and during lunch I remember Mr. Renga was telling education about tax is very important. So probably questions that I will be asking later will be something that I don't know, So it might be stupid questions for some of you, but it could be something to enlighten most of us, okay? And of course, today we are down with only 2 panelist speakers, one having symptoms, and not feeling unwell, Mr. Krishna feeling unwell. So basically, let's start this. I have, of course, these giants in tax. We have from Deloitte Tax Services, Mr. Muhammad Faris and Mr. Abu Tariq. Mr. Abu Tariq is the Deputy CEO for Compliance in IRB, and he is responsible for supervising tax audits, investigations, and profiling activities undertaken by IRB. Okay? And before this post, he was the Deputy CEO for Policies, and he holds a Bachelor of Laws with honours from the University of Malaysia. And just now during lunch, we mentioned it quite rightly, laws and tax cannot run away, must be together, right? Okay, and of course next we have Mr. Muhammad Faris. And when Mr. Francis told me, Mr. Muhammad Faris is here, so I look at the photo. Ada janggut punya. So it must be easy for me to find. But because everyone wearing the mask these days, I couldn't find him until he called me, right? I think I have very good panelists today. Mr. Faris is in the Government and Public Services Deputy Leader of Deloitte Malaysia, where he focused in serving clients mainly which are government agencies, statutory bodies, and government-linked companies as well. Not just that, he also involved in various tax engagements, including GST implementation services, Foreign Account Tax Compliance Act, as well as overseas experience. He has working experience in Kingdom of Saudi Arabia in 2018. All right? Yeah. Please give them a round of applause. And I am Hong Ling, the former TV presenter for Selamat Pagi Malaysia. If you wake up 6 o'clock in the morning on a Saturday, 15 years ago, you will see, me on TV. All right, let's cut short all this without further ado. Perhaps Mr. Abu Tariq would like to start.
Bismillahirrahmanirrahim. Thank you, Ms. Chiu, for your kind introduction. Ladies and gentlemen, distinguished guests, distinguished panelists of the Faris, Assalamualaikum and Selamat Sejahtera. First and foremost, I would like to take this opportunity to record my utmost appreciation to the organizer, ISIS, for inviting me to be one of the panelists for this year forum. Ladies and gentlemen, with respect to the topic corporate tax and fiscal policies after the COVID pandemic, I would like to start by taking a step back, looking at what are the tax measures that has been announced during the peak of the pandemic, and which of the measures that are still relevant or effective or applicable now as we are entering into endemic stage. The COVID pandemic has indeed been an unprecedented event, as it was not only a health issues but further affected people's livelihood, restricted business activities, and impacted the economy of the nation. And to soften the impact, the government has taken swift action to assist the rakyat and businesses during the pandemic with the announcement of various stimulus packages. Basically, we have 8 stimulus packages and 2 expansionary budgets in 2021 and 2022. And the total amount spent by the government for these assistance packages is 530 billion, which includes, among others, tax assistance in the form of subsidies, tax incentives measure, loan moratorium, and many more. The 8 packages are, if I can start, PRE, Package Rangsangan Economy, which has been announced in February 2022, Prihatin in March 2020, Prihatin SME in April 2020, Penjana in June 2020, Permai in January 2021, Pemekasa in March 2021, Pemekasa Plus in March 2021, and the last stimulus package is Pemulih in June 2021. And to be a bit more specific on tax, the tax measure that has been introduced will aim to assist people cash flow, regenerate businesses, particularly SMEs and micro SMEs, and alleviate the rakyat welfare. Let me just do a recap on some of the notable tax measures introduced throughout the pandemic. Firstly, to help businesses and ease their cash flow, we have allowed amendment to the estimate furnished by the companies in the 11th month. Normally you can revise your estimate in 6 and 9 months, but during the pandemic you can revise it in the 11th month of the basis period for year assessment 2021 and 2022. We have also given due consideration to taxpayers who request for rescheduling of tax payment and those who appeal on the imposition of penalty, as well as allowing an extension up to 2 to 3 months for the taxpayer to submit their written form for year assessment 2020. So normally you have to submit 7 months after you close your accounting period, but during the pandemic we allow 2 to 3 months extension. From 31st May last year to date, there has been 123,359 applications or appeals on penalty received by us, where the total amount of penalty amounts to 1.7 billion that we have basically reviewed and reconsidered the imposition of penalty. For specific industries which have been hit hard by the pandemic, like the tourism, cinema and spa industries, deferment of tax installment payment has been granted from 1st April to 31st December 2021. Tour operators which provide domestic tour packages are also given tax exemption for 2 years of assessment, 2021 and 2022. SME and micro SME has been assisted too with deferment of tax installment payment from January 2022 to 30th June 2022, just ended recently. SME are also enjoying stamp duty exemption on instrument relating to merger and acquisition. In terms of tax deduction, several special deductions have been allowed, which include deduction for the cost of renovation and refurbishment of business premise up to 300,000 incurred from 1st March 2020 to 31st December 2021. So during the pandemic, perhaps there's no business activity, it will be the right time for the businesses to renovate or refurbish their business premise. So that's the idea behind it. Deduction for the cost of personal protective equipment borne by an employer for its business from 1st March 2020. Double deduction for expenses incurred for the implementation of flexible working arrangement. We have another special deduction for reduction of rental to SME. But the rental must not be less than 30%. That will be from April 2020 to December 2021. A further extension for the rental is from January to December 2021. And finally, double deduction for COVID tests borne by the employer from 1st January 2021 to 31st December 2021. Right. Based from what I have presented, almost all the tax measures has ended in 2021, except tax measures on introduction of cukai makmur, where it is in the respect of income of the company for the basis period 2022, and the deferment or postponement of tax installment payment for SME that has just ended in June this year. It can be seen that majority of the tax measure or tax policy are temporary in nature as the economy slowly back to normal. The pre-pandemic tax rules will continue to apply. Having said that, based on the topic today, I agree that the pandemic had basically caused a significant deterioration of public finance, which call for perhaps review or rethink of tax and spending policies once the recovery is well underway. Based on the report by OECD back in October 2021 on tax and fiscal policy after Covid-19 crisis, it was found that in addition to the impact on public finance, countries are facing many long-term structural challenges. Okay. Among others are slowing productivity growth, accelerating digitalization, automation, artificial intelligence, rising inequalities, population aging, changes arising from globalization and mobility, climate change, environmental degradation, and rising health risks. It was suggested by OECD that in addressing the structural challenges, new tax policy should put growth, equity, and sustainability on equal footing. And post-pandemic, jurisdiction or countries should initiate tax policies that stimulate economic growth. That's one. Number two, tax policy that can enhance equity to address distribution of income and wealth. And thirdly, tax policy should support sustainability, whether in the context of environmentally related tax or other provision generally. Then in the context of the Inland Revenue Board of Malaysia, our focus into two of the structural issues, namely the accelerating digitalization and also rising inequalities. Firstly is the digitalization of the economy, which we have seen have further accelerated over the years, especially during the pandemic. The pandemic has shown us the importance of technological adoption and digitalization, where we can see that business with digital present could still thrive and survive despite the many movement restrictions enforced at the time. This new way or new normal of doing business should be embraced by all, and to remain relevant, enterprises should also make the transition and optimize modern technologies and business digitalization platform. The digitalization of the economy, however, had also raised several tax policy and tax administration challenges. As business has become more complex, there is the possibility of income being shifted away from where the underlying economy activity and value creation actually takes place. There is also the challenge of determining the taxing right of a country where cross-border transactions are easier to take place in this digital age. Realizing that the current tax system cannot tackle these issues, through OECD and G20 inclusive framework, a two-pillar solution to address the tax challenges of arising from digitalization of the economy has been developed and agreed by 134 jurisdictions, including Malaysia. Malaysia, which is also a member of the inclusive framework, has been actively participating in discussion on this at the OECD level, and the RBM itself is working closely with the Ministry of Finance to ensure that we have the legislative framework ready and in place to implement this two-pillar solution. In fact, this morning, I believe the CEO has mentioned about this two-pillar solution on digital economy. At Hasil, or at Inland Revenue Board, we have also recognized the importance of digitalization, and we have been improving our public services delivery to conform with the new normal. During the pandemic, fortunately, with all our digital system already in place, our public service delivery was not affected, despite the various movement restriction orders in force. For example, the taxpayer who could not get to our office due to the MCO could still directly connect with our officers and make an appointment if they have any issues through our e-Janji Temu Hasil system. The MyTax system, which has been recently launched, also provides a friendly interface which allows us to check their tax. We allow users to check their tax status, apply for a tax file number, update their profile and pay taxes, and many more. For the companies, in terms of automation, we already have a special incentive scheme or reinvestment allowance to incentivize companies in the manufacturing sector and selected agriculture sector to further grow their businesses. Through Budget 2022, which is tabled last year, we have further extended the reinvestment allowance for 2 additional years, the assessment 2023 and 2024, where the RA and special RA has expired. The second structural trend or issues is the increasing income inequality, which has become even more prominent with the effect of the pandemic. Cukai Makmur was thus introduced by the government on the premise that corporations which have performed exceptionally well despite the pandemic should pay their part by helping the government in its economic recovery effort, as well as sharing their prosperity with the rakyat. With the implementation of Cukai Makmur, it is expected to contribute a few billions to the government coffer. Malaysia is not alone, as other countries have also adopted similar measures like enacting wealth taxes during the pandemic. Based on our statistic and previous year record, Cukai Makmur will only be affecting around 233 companies, which is about 0.05% of the total active corporate taxpayer registered with the Inland Revenue Board. These 233 companies comprise of businesses in all types of industries, but 60% of the companies are from manufacturing, insurance and takaful businesses. Only 81 or 35% out of 233 are listed companies, or comparatively only 8.7% of the total companies listed on Bursa Malaysia. As Cukai Makmur is only a one-off tax, there's still a need to look into other measures to tackle the rising inequality. We have been looking at the implementation of capital gains tax, and a public consultation was also done last year to get the public and industry player view on the introduction of this new tax. However, majority of the feedback we received were not favorable to the proposal, with concern on its impact to the share market, potential loss of foreign investment, the increasing tax burden, and that it would dampen Malaysia's competitiveness compared to other jurisdictions. So it is not easy to introduce new tax. Perhaps study need to be carried out before the new tax, for example, the capital gains tax, can be introduced in Malaysia. The government has also addressed the structural issue through Budget 2020 by increasing the tax band for individuals with chargeable income of more than 2 million from 28% to 30%. This affected about 2,000 high-income earners in the country. Also, part of the government bid to address inequality is the Bantuan Prihatin Rakyat. I think everyone knows about this. A cash incentive given out to help and ease the burden of the lower income household, specifically the B40. Ilan Revenue Board has been MOF active partner in helping to roll out the Bantuan Prihatin Rakyat to all. In 2021 alone, the government has spent about 16.8 billion for BPR, which has benefited more than 8.5 million recipients. Through Budget 2022, we have also introduced the tax identification number, or shortly known as TIN, which will help to widen the tax base and help us identify those previously not within our radar. Currently, with this new measure, every individual at the age of 18 and above will get a TIN number, tax identification number. Okay, whether or not you're taxable, whether you're taxable or not, you're still going to get this number. This is another measure where we hope that it is basically an awareness program for all the public to know one day when they have income which is subject to tax, they already have the number with the Inland Revenue Board. I think, Ms. Chiu, I'll stop there. And perhaps if there's any question on my presentation, they can raise it later. Thank you.
Probably Mr. Muhammad Faris wants to add on some of the points, and probably you have some points for yourself as well.
Okay, thank you, Ms. Chiu. Yeah, I think Chair Abu Tariq has raised very valuable points. There were a lot of interesting points. I just wanted to add a little bit on this topic. First thing is there is a need to broaden our tax base in Malaysia. Right? If we look at the percentage of our taxes over the total federal government revenue, I'm talking about direct tax. It's more than 50% of the government revenue comes from direct tax, which is the income tax, your personal income tax, your corporate income tax, the petroleum income tax. Right? And also there's close to about 18.8% comes from indirect tax, the service tax. Right? Okay. And from here we see that we are heavily reliant on our direct taxes to support our country or the government or the country's expenditure. Right? I think there is a need to look into that angle. I think from another point of view, if we look at our tax collection over the gross domestic produce of the country, at the moment I think we are at about 11.4%. So I would say that there are still room for the country to collect a little bit more taxes. But the question is from who we should collect, right? And if we look at our existing income tax rate, I'm focusing on corporate income tax rate, we are at about 24%, right? Singapore is at 17, we have Thailand at 20, Indonesia at 22. So it shows that we are slightly higher, but not too high, right? I think on that angle we are competitive. But in order for us to raise additional revenue, I think the question that we need to ask is whether we should raise our income tax. This is not, I would say, a favorite topic for everyone, but I guess there's a lot of angle that the government needs to look into before looking into this angle. First is whether how 1 or 2% additional tax rate would hamper the foreign direct investment into the country. Right? I think that's some of the angle that we can look into. And I also wanted to point out to add on to the point that Cik Abu Tariq has explained just now. I think we talk about there's a lot of initiatives by the Ministry of Finance as well as the Inland Revenue Board to encourage taxpayers to come forward and to comply with the taxes. So my key point is that let's make it simple for the people to comply with tax, right? So I guess the simpler the tax system is, right, the greater desire for you and me to comply with taxes. I think if things are very automated, we feel it's easier for us to comply, right? And I think and the pandemic has also pushed for a lot of technological advancement in businesses, right? And more people are venturing into the sharing or the informal or even gig economy. Right? So this, I would say, this trend may affect our future tax collection. Right? So from salaried employment, people are starting to venture into online businesses. Right? So if we do not do enough to, I would say, to educate or to capture this group of new taxpayers, right? I think we will lose out in a lot of revenue collection. Right? So I think passing the time back to Ms. Chu.
Okay. Thank you very much. Thank you very much, Mr. Muhammad Faris. I think it is also very important for the tax simplicity in tax compliance. I think the keyword is also education, you mentioned earlier. I still remember when IRB wanted to all the businesses, including e-commerce businesses, to register as business so that taxes can be collected from this so-called home-based business and digitalization. There were rejection, of course, reluctancy on that, possibly because the educational part wasn't there at the first place. Yeah. So basically, like what we are going to, our topic for today is corporate tax and fiscal policies after the COVID-19 pandemic. It seems like all the Penjana, all the packages that is now stopped, and looking at things moving forward, it looks like business as usual. COVID cases has been on the rise for a while, but I don't think government is going to go back to the lockdown period. But business has also been very slow. Is there any other perhaps policies to help business to come back, to ease business, as well as to balance the taxes being collected?
Okay, as you can see from earlier during the pandemic, I can only speak on behalf of the Inland Board, right? So what we can offer, so normally we can, what within our power, specifically what we can give is extension of time for submission, perhaps longer installment period, and we can also consider on the penalty that we impose on the assessment raise. So if any companies, they still have issues on cash flows, I think within our power, based on facts of each case, we can still consider their application. And in fact, for penalties, after the pandemic, we have issued a new penalty structure for our audit. We have reduced our penalty structure from 45% to 15% for the first time, for the first audit finding. Then increased to 30%, and the third offence or the third audit will be 45%. So that's basically a change in our audit framework, not to encourage non-compliance, but perhaps there are a lot of reasons why taxpayer fail to comply or submit incorrect return, right? So for the first offence, it is only 15%. Of course, we're going to go hard on taxpayer who with intent try to avoid tax. So we make it clear in our framework, penalty of 100%, if we can prove that you with intent try to evade tax. But a normal taxpayer, perhaps because of they couldn't understand the tax law, or there's an issue, something which is still ambiguous, which is not clear to them. So the penalty could be 0 if it's a technical adjustment. If it's not a technical adjustment, it will start with 50%. So that is basically what we have now after COVID. And Faris, I did mention about to make things probably simplify the tax process, right? So I think one of the initiatives is to introduce e-invoicing. So e-invoicing is where once you transact, all the transactions will be captured by the authority. Okay. The good thing about this e-invoicing for individual taxpayer, for example, we will pre-fill your return. Now you need to keep your receipt, right, to prove your claim in your tax form. With the e-invoicing, with all transactions captured by the authority, we will pre-fill your return, and hopefully, the idea of that e-invoicing, finally, when you receive your return, you will have all your whatever that you can claim for that particular year, without a need for you to keep the receipt. Okay, so you can just confirm, yes, during those periods, I have purchased computer, whatever that you are entitled to claim. If you have anything to add, then you have to inform the tax authority. So that's the idea of e-invoicing, other than we can capture for the businesses to determine the income of the business entity. But for the individual, once they transact, once they purchase any item which they can claim, then automatically will appear in the return. Hopefully that will be the ideal of e-invoicing concept for the individual. So hopefully they don't have to keep, because now the most common problem for individual is that they don't have the receipt, right? Or the receipts has already become blur, or you cannot read the receipt. So with the e-invoicing, hopefully we can address that issue. All right.
I think on my level, I do not have much more questions to ask. Perhaps I can open to the floor. If there is any questions from the floor, the microphones is right at the center. please come forward, mention your name and where you are from, and pose a questions if you have. Yes, please.
Respected panelists, my name is Woon. Now, as mentioned, the government has expended a substantial sum of money to help the SME, as well as give subsidies to the, say, B40. So all these are substantial expenses. My question is that without further increasing the tax from 24%, income tax 24%, how would the government be able to cover up all these expenses? And if increasing the 24% further will hamper investment and development, what are the other sources for the government to increase the revenue in order to replenish all these deficit already expended, and how many years you estimate the government need to do so in order to put our government finance into the right track? Thank you.
I think for this, Mr. Abudari.
Thank you, Mr. Wood, for your question. True that one of the constraints of the pandemic is the government financial position. Okay, how to increase tax? On the part of inland revenue, of course, we have to make sure that the compliance is high. We have to improve the compliance in the context of compliance, where we have the measures that we have introduced beginning from last year. For example, we have the tax identification number. So hopefully we will broaden the tax base, the number of taxpayers. We have already introduced tax compliance certificate. Before a company can, before they can get a government contract, they need to make sure that all their tax are in order. Okay, so they have paid tax within time. They have declared their return are all in time. So we also plan to have the tax corporate governance arrangement with the taxpayers. Again, these are all to encourage voluntary compliance on the part of the taxpayers. Our approach is to cooperate with the taxpayers, identify the issue early, avoid dispute with the taxpayer, with the hope that they pay the right amount of tax on time. Other initiatives would be, we know that we have Pillar 1 and Pillar 2 arrangement. Pillar 1 is to basically give us right to tax. Before this, when you talk about digital economy, because they are not here in Malaysia, we don't have the right to tax. With the Pillar 1 and Pillar 2 approach, right? Pillar 1 basically gives us the right to tax. So that is basically an additional tax that we should receive once we implement Pillar 1, perhaps in 2 years' time. Okay. So other than that, I think, of course, to introduce new tax, I'm not in the position to comment. Okay. Obviously, we have other taxes that we can, be it GST or capital gains and so forth. But again, I'm not in the position to comment on that. But that is one of the solutions, perhaps, that need to be looked by the Ministry of Finance. I'm sure they are looking into it, whether we should or whether it is the right time to do it or not. But on the part of the revenue, on the part of the Inland Revenue Board, we just have to make sure that the compliance level is at a very high level, okay, for them to pay the right amount of tax each year.
So probably I add a few more points. Right? I think on top of what has been mentioned, right? I guess Chair Batari is very reserved in suggesting on new taxes. Yeah, I guess that's actually one of the solution, right? Yeah, we need to reduce reliance on the income tax. Right? We need to relook into consumption tax. Right? We had GST, we have removed GST, and now we are back on SST. But I guess there are two ways to go about it: to look into the scope or the rate of the service tax itself, and another angle is to also really reconsider the implementation of GST. I think we have had that discussion earlier today, so I'm not going to explain a lot more on that. And another angle that we should look into is plugging the tax leakages. As what Encik Abu has mentioned, is what the Inland Revenue Board is trying to do is to encourage compliance, to get the public to cooperate with the government, to encourage compliance. Right? So it shows that there are still leakages of taxes, meaning that there are still income which are unreported for taxes that has been swept under the carpet. And that's why there's introduction of the tax identification number, and also the tax compliance certificate is there to address. So I guess these are the angle of what we call it shadow economies. Right? People who have business but under the radar, people are in the sectors that are very hard to get, right? And also there are businesses who are involved in a lot of probably illegal activities. They have income, they should be reporting income to ensure fair treatment to all taxpayers, especially like you and me, who've been paying taxes. And it's also very important to also reduce the burden of the government to expand the money collected for the development of the nation. I just downloaded a statistic from the World Economic, from the Quarterly Informal Economy Survey by the World Economics London. Right? So at the moment, Malaysian shadow economy, I would say it's not that bad. It's about 25.3% of over gross domestic produce. So there are still room for us to collect taxes based on our existing tax system. It's just about enhancing tax compliance by the public at large.
You mentioned several things regarding like shadow businesses, right? What are the examples, perhaps, we can look into? Examples. For example, people who are shadow economy doesn't mean it has to be illegal. There are legal activities. Right? So, for example, like people who are doing home business, home baker, they to a certain extent, some of them are making really good money. But because they are very informal and nobody is there to, I would say, to catch them. Tax authorities, probably it's very difficult to address this angle, right, of economy. So these are one of the examples. Another one is those that are involved in illegal activities. Right? So I do not need to explain what are illegal activities, but but these people or these businesses, more often than not, they do not pay the right amount of taxes. All right. Is there any more questions from the floor? I thought the cameraman wanted to ask a question. No. All right. No more questions from the floor? Last question. Normally, I attended seminars like questions, abundant of questions that we do not have enough time to even address. So I think the speakers have spoke so well, so clear, that no other questions are needed, right? Can we give them a round of applause once more? And thank you very much to Mr. Tariq. In fact, I think it is really the education and probably the enlightenment of what the Inland Revenue Board have done. What are the things that we have given incentives to? But probably sometimes people also think all this only happened because of the pandemic. Probably they need more of these sweets once in a while, not only during pandemic, right? And perhaps I think probably we also want that business and corporates at the moment to come back as usual, and hopefully it will also compensate and help the economies of the country, and in terms of taxes, enough taxes for us to run the government and all the basic needs that we currently enjoy. All right. If there is no more question, I would like to thank both my speakers for today, Mr. Abu Tariq and Mr. Muhammad Faris, and one more last round of applause for them. Thank you very much.
Thank you. All right, thank you so much, Ms. Chiu, for that. Mr. Abu as well and Mr. Muhammad Faris. Please remain on stage right now, as I would like to invite up on stage Dato Sri Samsun Bahrain bin Muhammad Jamil.